There's been a lot of talk lately about Twitter and how well it's done since its IPO, but I've said several times now I think that Twitter was and still is overvalued. One day it may grow into that valuation, but right now it's just not making the kind of revenue it needs to be to justify that sort of price tag. And in this video guide, I wanted to discuss an alternate tech stock that, or category, that's revolutionizing the way people do business, and it's not nearly as celebrated as a site like Twitter, but nonetheless it's not just as popular, but it's a very popular service. And in this case, I'm talking about real estate websites. Both Zillow and Trulia.com are public companies. Zillow is the much larger of the two. And over the past couple of years, these have actually begun to replace the traditional real estate agent, realtor, MLS sort of service. Now home buyers can go on here and look for houses. They can put up their houses and take offers, all without a real estate agent's help. And they can also look for rent. And even real estate agents are taking to this with this sort of Find a Pro thing. Real estate agents can sign up to pay Zillow to be advertised in this section, and a lot of realtors are doing very well by advertising on Zillow. So the great thing about Zillow and Trulia is that they do both for sale and for rent. So when the housing market does poorly, rentals tend to do well. So they always win. In particular, both of these sites are taking advantage of a secular growth trend in the use of the internet. Basically what it boils down to is more people are doing more things online all the time, and buying and selling property and looking for rentals is no exception. So as time goes on, more and more people are going to be using these sites. So since they win no matter how the housing market is doing, and more people are going to be on them every month, there's room for tremendous growth. Especially as, once the people go, then more realtors and advertisers are going to follow. These revenues for these companies could seriously increase. They're still at a fraction of the overall real estate market. I mean, there's trillions of dollars worth of property available. So there's, a huge room for growth. And out of these two, I really like Zillow the most. I want to discuss why. First, Trulia is much smaller, has a market cap of $1.3 billion, and the most concerning thing is in the financial section, they've lost quite a bit of money in Q3 of 2013. Ignore this number because this is 6 months, not 3. I'm not sure why it's doubling up the quarter. Maybe they didn't report on the quarter. But regardless, the revenue growth has been fairly slow. This past quarter was actually pretty good for them, right there. So that wasn't too bad. But overall, in the past, they've spent a little bit too much money, and they're just not growing quickly enough. Like this quarter, that's pretty tepid growth. And 1 quarter jump, that doesn't, to me, what that indicates is that Google changed their algorithm, which really favored Trulia in the search engine results. So Trulia got a sudden spike in organic traffic. This is important because it means to me that this is probably not a sustainable increase, whereas I think Zillow has a much more stable and interested user base. I think their service is just more fleshed out. It's just bigger and better. So when you look at Zillow, it's a much more expensive $3 billion, but it's still a real bargain. They're not making any money yet, but if you look at the financials, the revenue growth is vast. So let's set this to the annual. And you'll see that every year, they've more or less doubled their revenue. That's like an insane amount of growth. From $17 billion in 2009, $30 billion in 2010, more than doubled here in 2011, and still up almost, over 80% in 2012. And these past quarters are pretty good too. We're already at last year's income, and there's still another quarter to go, if not more. So, or there's only a quarter to go, but they're at least at last year's total right here. They're already surpassed last year's revenue total with another $50 million quarter to go. So, Zillow is probably going to make close to $200 million this year, and they're still only valued at $3 billion. That's 15 times their revenue. While they're not making any money yet, that's not very expensive for a stock that's growing this quickly, especially since it's an internet stock. Their expenses just aren't that significant. So continuing on, when looking at these stocks, there's a few things that you want to consider. And that is that a lot of these stocks are dependent upon Google traffic. So in order to tell, when Google makes a change to its algorithm, which is how it calculates what site ranks for what term, it can drastically alter the traffic flow to either of these sites. I think Google's sort of trending in a direction that favors these two sites simply because they provide what users are looking for. So what you can do though to be safe and sort of protect yourself from these traffic-based sites is to use a tool called alexa.com/siteinfo. And what you can do is type in a website. So if you type in Zillow.com, it'll give you its popularity rank in the United States and globally. So we're focused on the United States because almost all their traffic is based in the US. And we can see that in 2013, Zillow has experienced explosive growth. This is the global map. And we'll see that they went from 600 to 400, up here being near 200. And they're really trending high right now. This sort of flat path is okay, because remember it was flat in 2012 despite massive revenue spikes. This is just representative of another huge revenue spike. And 56 in the United States is not bad. Sorry, I clicked on the wrong thing. You'll see that, if you go by country and then United States, that these are major sites: Yahoo, eBay, Wikipedia, PayPal, CNN, ESPN, Huffington Post, Instagram, Netflix. So to the fact that New York Times is 35 and Zillow is 56, that's pretty good. They're up there with Flickr, BuzzFeed, Adobe, WordPress. All these major sites, they're up there. So that's solid. And meanwhile, if we compare that to Trulia, let's go back to site info, we'll see that they're a much lower 149. And they also experienced the same sort of growth this year, but they've kind of fallen off, and that's why their revenue has dipped, or at least slowed down in growth. I think that even with a traffic decline, these sites are still growing revenue because more and more people want to advertise on them. Those are realizing that realtors and real estate agents are recognizing the value of advertising on these sites, so they're still able to get more revenue, even despite declining traffic, like we see here for Zillow in the last couple, or for Trulia in the last couple months. So another check you can do right before earnings is to go to Google.com and just search some common keywords like Boston real estate, and we'll see Zillow is number 2, a local site's number 1. And what we're doing here is just checking out some popular markets. For just every major city, again, Zillow number 1. And Zillow number 2, and they're all in the top. What you would be checking for is if you were to do this check right before earnings, and suddenly Zillow was not number 1 anymore and was like down at the bottom or not even on the first page, you'd want to dump that stock and sell. And you can do that just once every 3 months. It's just a neat trick that you can use to evaluate internet sites that are companies, rather than, deal with the up and down earnings that often accompanies them. But this revenue growth is just, exponential. And to be able to get, what's probably going to be a $200 million earnings stock for $300 billion in the internet space, where eventually they can really cut back costs and just make high margin profits, is just huge. This stock could easily, if it doubles its revenue again in the next year or two, it could easily be a $6 billion stock. And in the last year, it's actually gone up significantly, almost 200%. But you'll see in the last 6 months, it's really, kind of side traded. It's consolidated. It took advantage of this big growth, and it's even come down off its $100 high. I think it's a really good time to enter. And you're probably not going to see any massive movement until earnings on February 10th. What you can do is set your technical simple moving average at 50 days. This will kind of give you a good entry point to the stock. So right now we're looking to buy at 78 or less. So if this stock dips under 78 in the next couple of days, it's definitely a good investment. And even if you're watching this video years from now, I still think that this is a great stock. Hopefully it'll be worth much more than $3 billion then, so I get to look good. But I just wanted to point this out to you. Let's again, the reason I wanted to do this was just to compare to Twitter. Right now Twitter is at $37.5 billion, and that's just over the top. So Twitter, in the last year, is only making about, let's say, they're growing their revenue quick. I will give them that. Quicker than Zillow. But, they've only made about $500 million and have very high expenses, much higher than Zillow. And, they're over 10 times the price, despite only having, less than 3 times the revenue. Faster growth, sure, they will make more, but not that much more. It's not quite like Zillow's, not quite like Zillow, and it's, this is new. And I just don't think that they're comparable from a value standpoint. Twitter, eventually it might grow into this valuation, but at $37 billion, this number is going to have to read, if they're going to trade at like a level like Google at 20 to 30 times earnings, they're going to have to, come up with 10 times the amount of revenue now. Zillow only has to double their revenue to get a stock, to provide you a strong return, and they're going to do it. So, hope this video was helpful for you, and subscribe to my channel if you want more regular analysis like this one.